Happy Easter holidays. Welcome to Business Morning. I'm Esther Ubudaga. Thank you so much for joining us. Nigeria's Finance Minister, Dr. Ngozi Okonjo-Iweala, will face a panel of interviewers today at the World Bank headquarters in the U.S. state of Washington, D.C. While the Finance Minister is expected to deliver an opening remark, that will also be followed by some discussions and then respond to questions from an audience that would also include members of the public. Well, she will tell those present why she believes she's the woman for the job and how she intends to add more value to the World Bank. Now, the other two contestants in the race for the World Bank presidency, that's a former Colombian Finance Minister, Jose Antonio Ocampo, and Jim Yong Kim, that's the candidate presented by the U.S., will also have their turns on Tuesday and Wednesday, respectively. That's also this week. Now, although the developing nations are presenting a candidate for the first time in over 60 years, they're under no illusion that it's going to be an easy ride. Well, they're certainly not deterred and have been drumming up support for Nigeria's finance minister in the last couple of weeks. Now, several heads of state, the African Union, and just last week we had an open letter from about 35 former employees of the World Bank, made up of economists and directors. Well, they wrote to the World Bank, telling the World Bank why they believe Dr. Ngozi Okonjo-Iweala is the woman for the job. Now, also, of course, Nigeria's diplomats across the world have also been, they've also been rallying around the finance minister to ensure that she gets all the support that she needs. Well, it's certainly not going to be an easy ride. The US, Europe, and Japan have about 54% of voting right. Not just the US allies are also going to ensure, according to Word on the Street, that the U.S. still retains hold of this World Bank presidency. But, of course, the race still continues and will continue to track that for you. Well, there have also been calls by developing nations for the World Bank to ensure that this time the selection process is merit-based and not just based on the fact that one country has been holding that position in the last 60 years. They are calling for a change in the entire voting system. They have been having talks. We've had the BRIC nations also meeting to ensure that this selection process, the voting system, is changed into a situation where candidates will be selected not based on the fact that they're from the U.S., but also because they are actually qualified for that position. While it's still a developing story, the race is still very much on, and we'll be tracking that here for you on Business Morning and also on Channels Television. Well, of course, it's still the Easter. We're still very much in the Easter spirit, and as usual, as is the usual tradition, Nigerians, the local markets recorded last-minute shopping. Nigerians always in the habit of having some last-minute shopping ahead of whatever holiday is coming up. Now, our business correspondent, Chimezie Obiwagu, hit the street in some local markets to capture last-minute shopping on the part of Nigerians.
Unlike every other celebration period, the Kara market on Ibadan Express Road, known to be a market to buy goat, ram and cow, was rather dull. The sellers, while gisting away, were hopeful that customers will come to buy their items.
No market. The market everywhere just did door. So now we don't bring market now for the Easters, but we don't see customers.
Why do you think it is like that?
Actually, it is not like that before, because if any seller is coming like that, if you bring market, we see everything will rush. But this time now, everybody just sitting down and be looking. We are expecting customers to come.
So why do you think people are not coming? Why do you think it's like that? Why are you having low sales this time?
I don't know. But our people, we discuss why the market can't do like this. They say, well, maybe na time we know the balance.
However, more buying and selling activities were witnessed at the Odo market in Ikeja. Buyers who rather preferred to buy their food items in small quantities still had some complaints to make.
Things are very expensive. Things are very hard. As you can see, the meat we buy for 1,500 before, we can't get it for 2,000 now.
Maybe because of Starway Day, meat is too cost, and they will not see any day at all. As the meat is cost now, no markets, everything is too cost.
No matter how expensive these food items might be, for many, sharing in the joy of the resurrection of our Lord Jesus Christ is paramount. Chimezie Ogunwago for Channels Television News.
Interesting stuff there. Well, let's go over to what the markets looked like last week. That's talking about Nigeria's financial markets, and of course also a brief look at the international markets, where the local bourse had just 4 days of trading. We saw some volatility recorded all through the week. However, the bourse ended the week positive, up 1.4%, but still below 21,000 points. It ended at 20,941.93 points. We had some stocks that stood out last week. In particular, we had Okomo Oil. But let's take a look at the list of the NSE top stocks. That's those stocks that stood out last week in terms of price appreciation from Monday up until Thursday, the 6th of April last week, Thursday. Age 11ers took the top spot, moving up about 19.8%. That's a 25 kobo a change to its share price, closing at 1.51 kobo per share. Okomo Oil also rallied last week on the top spot too, 19.6% to the upside, also gaining about 5.49 kobo and closing at 33.5 kobo per share. GT Assurance also on that list, it moved up 14.1%. That's a gain of about 18 kobo to the share price, closing the week at 1.45 kobo. Now for our top pick for the week, that's Okomo Oil. Okomo Oil has risen about 38.4% in the last 2 weeks, and just after the company released its full year 2011 earnings that impressed investors across the board. Now the stock went from around 24.20 kobo to 33.50 kobo per share on the last trading day of the week. Now the company had earlier reported 2011 revenues of about 11.1 billion naira from a little over 6 billion naira in 2010. Pre-tax profit also jumped from about 1.62 billion naira to 3.9 billion naira. The company then recommended a final dividend of 4 naira per share. Now this is in addition to the 1 naira interim dividend announced last year. So that will bring to total 5 naira that investors of Okomo Oil will be getting this year. Now, of course, we know that volume has been moving significantly, surged in the last couple of weeks as more investors position themselves to take advantage of the good fortunes of this company. Okomo Oil is listed under the agricultural sector of the Nigerian Stock Exchange. It's into the development and management of oil palm and rubber plantations, as well as the processing of oil palm. Demand for the stock, as I said, has surged significantly in the last 2 to 3 weeks, and will continue to track the performance of Okomo Oil. Now, away from the equities market, let's take a look at the money market. We did see some liquidity squeeze at the interbank market last week. Core money and also the long-term cash also closed a little lower, though, although there's still pretty much liquidity squeeze. Core money or short-term lending closed at an average of 14.5%, and that was for the core money. The naira at the currencies arm of the market, we saw the naira also closing a little bit weak against the dollar last week, Thursday, closing at 157 naira, 70 kobo to the US dollar. We did have some cash inflow coming into the market from the open market operations. There was a total inflow of about 133.3 billion naira into the system, while funds worth about 49.5 billion naira was sucked out of the market. Now, back to the naira market. The naira got a firm boost from the CBN Forex sale last week. The Apex Bank offered a total of, or sold a total of $300 million. Let's take a look at the breakdown of the CBN's bi-weekly auction for last week. On Monday, the Apex Bank offered and sold 150 million naira, offered $150 million, but sold $100 million at the rate of 155 naira 90 kobo to the greenback. On Wednesday, the 4th of April, the Apex Bank offered $150 million and sold that same amount and at the same rate from the previous auction. That's 155 naira 90 kobo to the greenback. And on the international scene, global markets, we saw quite a number of volatility being recorded. China still put investors on the edge, and of course there was renewed concerns over the state of the Eurozone. The debt crisis still very much on. Well, this time there's focus on Spain. Spain still records the highest unemployment rate in the Eurozone, 23.6%. And of course we do know that the country had a very unsuccessful bond sale last week, and investors are now demanding more to take or to hold on to Spanish bonds. So that of course put investors on the edge. Although the Dow, that's on the American bourse, still closed the week up at over 13,000 points. The Asian markets and the European markets particularly closed the week in the red. Now, as part of efforts by the Nigerian Stock Exchange to help deepen the market and, of course, bring more investors into the market, the exchange announced the appointment of 10 primary market makers last week. Well, 20 companies made up of banks and brokerage firms came forward for that particular position. But after a very thorough, rigorous selection process, the NSE decided on 10. When Business Morning returns, I'll be talking to Tola Odukoya live on phone. He's a vice president of Don Lauren Merrifield, a financial services firm here in Lagos. It was also one of the companies selected as a primary market maker for the NSE. Well, he'll be telling us all about who market makers are and how this will impact positively on the Nigerian Stock Exchange. We'll be right back. Welcome back to Business Morning. For a couple of years now, analysts and market stockbrokers have been calling for the introduction of primary market makers. According to them, that will help deepen the market and provide a much-needed liquidity. Now, joining me on phone live is Tola Odukoya. He's a vice president of Don Lauren Merrifield, a financial services company here in Lagos. They're also one of the companies that was selected as market makers for the NSE. Good morning, Tola.
Good morning, Esther. Thank you for having me.
Okay, now I know Don Lauren Merrifield, your company, was selected as one of the market makers. But first of all, tell us, who is a primary market maker?
Well, essentially, market making is about giving bid and ask prices on specific securities. In this instance, specific stocks. Now, a primary market maker, in line with the initiative of the Nigerian Stock Exchange, is to deal in certain stocks or equities, if you please, and give bid and ask prices. And when I say bid and ask prices, I mean buy and sell prices. So essentially, a primary market maker for a particular stock, let's assume stock A, for example, will give you a buying price at which the market maker will buy that stock for you, and the price at which the market maker will sell that stock to you. So at any point in time, on any given day, once you call a market maker, you are sure to be able to sell or buy that security, contrary to what you have at present, where you are limited by the fact that if there is no seller in the market, you can't sell, and you can't buy rather, and if there is no buyer, you can't sell. So essentially, the market maker is there to create liquidity in certain securities, and that's what we have in Nigeria at present.
Okay, Tola, so what you're saying is if as an investor I place an order to sell a particular stock and I'm not sure if there's a buyer on the other end, so the primary market maker takes it from me. What if as he takes that stock, he doesn't have a buyer or somebody to buy or sell, and it perhaps drags on for maybe a day or two or even a week? What happens to that particular stock? And where does it get? Does the money come out from his own pocket?
Can you repeat that, please, Esther?
Did you hear my question? I said when an investor tries to buy or sell a stock, gives it to the primary market maker. If the market maker does not have a buyer or a seller ready to buy or sell that particular stock, what happens? Does it just hold on to it for, I'm not sure, for whatever length of time it takes?
No, essentially, like I said earlier, the key function of a market maker to start with is to buy or sell that stock to you. Now, going back to your question, if, for example, the particular market maker doesn't have that stock in its inventory, there's another important part of market making, financial markets, called securities lending. Now, what securities lending means is that if I'm your market maker, for example, and you call to buy or sell a stock, let's say in this instance you want to buy. Now, I can go to certain institutional investors and then, sort of borrow the securities from them and then sell it to you. With, of course, I'll be required to buy back those stocks for the lender somewhere down the line. So essentially, like I said, the key thing for market making is to create liquidity in the market such that at any point in time you can buy and sell your securities, such that we don't have the stock prices plummeting just because there's no buyer from the market, or just going up because there's nobody selling.
Okay, now Tayo, I know about 20 stocks, or the 10 companies were made to select about from a basket of stocks, about 20 of them. Now, what was the selection process? Why were these particular stocks selected?
No, not just 20 stocks. All the securities, all the equities listed on the NSE were put in certain baskets of 20 stocks each. So I reckon you have about 10 baskets or thereabouts. So from 10 or 20 baskets here, from A to J, I think. So in each basket, say basket A, for example, or let's pick the basket for which we are market makers, Dollar Merrifield. We have 20 stocks in that basket. Now that means that includes Guinness Nigeria, Mobil Oil, Cornerstone Insurance, and so on and so forth. So each market maker has a basket of 20 stocks that you can make markets on as a primary market maker. Now note that I'm saying primary market maker because according to the NSE, there's going to be a second phase of this whole initiative where you appoint secondary market makers somewhere down the line to further aid liquidity in the market.
Okay, now, Tola, what does this mean for the market? I know this is something that the stockbrokers and even financial analysts have been calling for, clamoring for the last couple of years, saying that it's going to impact very positively on the market. What does this mean for the market going forward?
Well, it's a very good step in the right direction. What it means for the market, I've been using that term liquidity since. It significantly enhances liquidity in the equities market. Mind you, we already have market makers in the bond side of the financial market, if you recall. Now, what market making does is that it ensures that at every point in time there's liquidity and you can go in and out of your positions, maybe even several times in a day, because there's always a buyer and a seller at the other end, contrary to what you have now, where you are limited by the 5% ceiling both ways, either you're buying or selling. And also, you can only sell if there's a buyer in line with the current system we have in the equities market. And you can only buy when you have a seller. But what market making does is that it takes all of that out, improves liquidity significantly, ensures that securities are always available for sale and to the bought. So the critical difference is that it significantly enhances liquidity such that you can go in and out of your investment positions as you please.
Okay, now Tola, while this is no doubt very good for the market in terms of provision of liquidity, in terms of investors' awareness, does the average investor, particularly the local investors, some of whom are still very much present in the market, are they aware of what this means for the market and how they can take advantage of it?
Well, one critical thing we need to bear in mind is that in view of the meltdown that occurred in the domestic equity market in 2008, you will agree with me that we have the presence of retail investors or ordinary investors, if you wish, has been significantly whittled. And so right now, the market, in fact, the entire financial market in Nigeria is moving towards institutional investors. Now, on the average, your average institutional investor understands what market making is and what it does and how it enhances the trading and liquidity in the financial market. So now, the awareness is what the NSE has done. Following the rigorous selection process, it was announced. And once the market making initiative kicks off and goes live, the market will be made aware. And from my knowledge of the market, I'm very sure that the most key players in the market are already aware of these initiatives. Now it now behoves on the individual or respective market makers to now go out and ensure that the markets are aware that they might make markets on these specific securities. And mind you, some of this information is available on the website of the Nigerian Stock Exchange and some of the company's website also. So I think the awareness is there within the financial markets for those who know.
Okay, Tola, how soon will we see an impact, visible impact on the market? This is coming early second quarter of the market trading year. So going forward in the short term, not in the medium term, how soon will we see an impact? Are we going to see that being reflected in the numbers, perhaps daily trading, perhaps even the movement of the all-share index?
Well, definitely you would see a significant improvement in volumes and liquidity. But I would expect that there will be teething problems, as with any initiative anywhere in the world, because mind you, this is new to this environment. However, you have people on ground who have done this in other environments very well. So that gives you comfort to be sure that it will be implemented effectively and efficiently. Regardless of that, I would expect to see significant improvements in the NSE all-share index. And I say that because if you look at the valuations at present, it boils down to the fact that people are a bit apprehensive with regards to buying stocks at this point. Let's even remove the fact that the current interest rate regime doesn't encourage investment in stocks in the short term. However, we must bear in mind that once you have liquidity, your foreign investor, your domestic institutional investors would be encouraged to go into a position because they know if, for example, for whatever reason, they want to get out of a stock or they want to sell a stock, they can always get a market maker who will take it off them. And also, if they want to buy that for a particular security, there's always a market maker who's going to go out there and fetch and source for those securities for them to buy. So definitely there will be a significant improvement in the short to medium term.
Now, your company, Don Lauren Merrifield, was one of the stockbroking firms selected as a primary market maker. What challenges do you see ahead, if any, in the short term, as this new development plays out at the market? Is happening for the first time, and everybody's trying to key into it. So, what kind of challenges do you think you may encounter as we go forward?
Well, for us precisely, I can say we are prepared because of way back 4 years ago precisely. In 2008, we were one of the major voices behind introducing market making to the Nigerian equity market as part of the initiatives to resuscitate the market. Beyond the fact that we had the global meltdown and all of that, but we felt that market making was one of the structural things that would enhance the resuscitation of the market. Now, generally, the challenges would be in terms of capacity. And in terms of training, like we all know and we are all aware of, this is a new initiative in the domestic environment. However, like I said earlier, there are people who are in this market today and who have practiced this in other markets in the world successfully. So beyond that, I think we are ready to go, and the market is looking forward to a successful implementation of this initiative.
Now, Tola, we do know that owing to the market downturn, which has, although improved in the last couple of months, or rather years, it's still not where we want it to be. Do you think that perhaps with this new introduction, this new development, which is expected to bring liquidity and revive the market, do you think perhaps portfolio managers we might see a shift in terms of, because we do know that many investors actually take more money to the bond market, for instance. Would we see more a shift in asset distribution of asset classes? Would we see more liquidity perhaps coming from the bond market or the money market onto the equity stable?
Yes, once the market making initiative kicks off and is running smoothly, I totally agree with you. I would expect to see a reallocation because, mind you, one of the key reasons why portfolio managers have been quite apprehensive with investing in Nigeria and in Nigerian stocks is that whilst the valuations are fantastic and some of the companies are doing quite well, the point is that if you want to buy a stock, say a stock is 10 naira, for example, and there's no one selling, because of the 5% limit you have, you could see that stock go all the way to 15 naira just because there's no one selling. Or if you want to sell a stock at 10 naira, you could see that stock go all the way down to 5 naira because there's no one buying. Now, what market making essentially does is that at any point in time, you are able to get out of a stock or buy a stock, provided it's within the bid and ask price of the market maker that you're dealing with. And when they say bid and ask, I mean the buying and selling price of the market maker. So definitely I would expect to see some sort of adjustment in portfolios in favor of equities, because you now have enhanced liquidity where if I'm a portfolio manager, for example, and I want to buy stock tomorrow morning, my stockbroker won't tell me because there's nobody selling, I can't buy and put in my portfolio. No. What I need to do is to contact my market maker or have my stockbroker contact my market maker, who will ensure that I get those securities into my portfolio.
As a market maker, in terms of liquidity, are you going to be sourcing for alternative sources of funding, or will that be coming straight out of your own coffers?
How do you mean?
In terms, because I know you, since you are going to be holding on to the stocks, whether or not you have a buyer, and of course, perhaps you still need to hold on to it. And if I understand it correctly, so what I'm saying is, in terms of liquidity, are you going to need more money for this venture, as it were, or alternative sources of funding, as it were?
Let's bear in mind that to start with, the minimum capital requirement for each market maker is 500 million naira. And to the best of my knowledge, I believe on the average from the 10 market makers selected, most market makers had capital in excess of 1 billion. In fact, like two or three times the size of the requirement. So beyond that, I'm also aware that there are certain initiatives going on right now to ensure that there's liquidity, financial liquidity, I mean now, to aid the market making initiative. We must bear in mind that there will still be one or two things to put in place before we can have a smooth running of the initiative. But even as we speak right now, I can assure you that these initiatives are where people are working 24/7 to ensure that these initiatives are put in place for us to have a successful implementation of the market making initiative.
Okay, now Tola, in terms of let's have make some projections here. In terms of market capitalization for the market, the NSE, we're currently at around 6.5 trillion now. Going forward, perhaps at the end of the second quarter, what kind of market cap should we be expecting as a result of the impact of the market makers?
That's a very interesting question, Esther.
Or is it a difficult one to answer?
I can only tell you that we will expect some improvement in the all-share index and market capitalization. But where we're going, no one can really tell. But I believe strongly that we'll definitely see improvements in the market capitalization and the all-share index, which can also be tied to the market-making initiative, provided the things required for it to run smoothly are put in place and then it's implemented efficiently, which I believe will happen.
Okay, now Tola, finally, before I let you go, now in terms of sentiments, we do know that sentiments towards the Nigerian Stock Exchange or stock trading in Nigeria is still mixed and perhaps, still towards the negative side. Many, like you said, the 70% of the market is still in the hands of institutional or even foreign investors. The local investors don't have a huge chunk of the market. Now, how is this going to impact on general sentiment or general perception of the market going forward? Is it going to be after when we have the visible impact, or how do you see all of this playing out in terms of sentiment towards the market?
Excuse Excuse me, Esther, can you repeat that, please?
In terms of sentiments towards the market, we do know that the perception that the Nigerian Stock Exchange or Nigerian stock market has is one of a market that is not vibrant, a market that is not where people can actually get, especially short-term investors, get reasonable returns. Do you see all of this market making as it impacts the market positively? Do you see it changing sentiment? Do you see a sentiment change into the positive zone in terms of perception of this local market?
Absolutely, because what this means for some of us who have been clamoring for market making for several years now, what this means is that you have regulators who are listening and who actually know what's required to move the market forward, and this, I believe, is one of it. Because I keep going back to that word liquidity, which is essential in financial markets. It's very important that you have liquidity in financial markets, and in this instance, when we talk about liquidity, we are talking about your ability to go in and out of your positions. How easy is it to go in and out of your position? And that's essentially what you have right now in equities, which we didn't have before. Remember, we already have the market making in the bond market, which has made it very, very, very quite easy for investors to buy government bonds and trade government bonds as the place, going in and out of the place. So definitely this initiative, from a global perspective, I believe the world will see this as a very welcome development, because it means, as a foreign investor, for example, sitting in London as a fund manager, it means if I buy a stock in Nigeria today, I don't have to wait until I get a buyer to take it off me. I know that if I have a market maker, I can get out of that stock as I please. So definitely, I think sentiments will reverse to being seeing the Nigerian market in positive light once again.
Tola, I know that I did say that would be my final question, but I think I should just chip this one in before I let you go. Now, because of all the good things that you have mentioned that this market will benefit from, do you think that perhaps now that we have about 70% of the market in the hands of foreign investors, do you think that the market is at risk of having more of them come to take an even bigger chunk of the market? If we have 70% of the market in their hands, do you think perhaps they might want to increase their shareholding or chunk of the market, as it were?
Well, that's a possibility. It's a possibility. You can't rule that out. However, remember, we also have a very strong section of the investor universe here in Nigeria. And when I say that, I'm talking about pension funds. Now, pension funds typically are major investors in financial markets. Unfortunately, we've not seen that kind of the desired level of participation from that segment of the investor universe in the domestic market. Now, there are arguments for and against why that's not so. However, with the enhanced liquidity as a result of market making, mind you, I wouldn't be surprised if the so-called foreign investors make their march in interest coming from the domestic pension funds, who have humongous financial capacity to deploy into any financial market here in Nigeria. So I think whilst it's a possibility that you might see an increase in interest from foreign investors, I equally believe the domestic investor universe, led by the pension fund in this instance, will also see some significant interest from that quarter.
Okay, Tola, thank you so much. I'm afraid we're going to have to leave it there for now. Thank you so much for being a part of this program, of the interview. I've been talking to Tola Odukoya. He's a vice president of Don Lauren Merrifield, a financial services firm here in Lagos. They're also one of the companies, brokerage firms, selected by the Nigerian Stock Exchange as primary market makers for the market. We'll take a quick break now, and we'll be right back. welcome back. You're still watching Business Morning. Well, financial markets across the globe are closed for the Easter holidays. Well, the markets in Asia are actually open. Let's take a quick peek into Asian trading, where markets are closed right now at the Asian bourses. Red numbers across the board there from the Asian stock markets, led by the Nikkei 225 in Tokyo, Japan, which lost over 1% this morning at 9,546.26 points. The Hang Seng Index in Hong Kong also off track, close to 1%. The Shanghai Composite Index in China also in negative territory, close to 1% to the downside, while the ASX 200 in Australia also ended in negative territory this morning, down at 4,319.85 points. While financial markets across the globe will be open tomorrow after the Easter holidays. Of course, our own stock market here at the Nigerian Stock Exchange will also be open for business after 2 days of the Easter holiday. Well, we'll still take another recap of the markets, but let's quickly check with the earnings board before the market closed, or just when the market closed last week, Thursday. We had two more earnings from two companies listed on the Nigerian Stock Exchange. One here from the insurance subsector of the markets, actually earnings forecast, what the companies say they will make in the second quarter of this year. This one from Prestige Insurance PLC, its Q2 earnings forecast for the period ended 30th January 2012. Turnover, according to the company, should come in at 2.1 billion naira. Profit before tax is expected to come in at 458 million naira, while the company expects to make a net profit of 307 million naira. Livestock Feeds also put out its second quarter forecast for this year. According to Livestock Feeds, turnover is expected to come in at 1.15 billion naira, profit before tax of 47.7 million naira, and a net profit of 38.1 million naira. Well, although these are earnings forecasts from some of the companies listed on the bourse, we're still expecting the 2011 full-year earnings of some other companies listed on the Nigerian Stock Exchange, particularly the banks. We're still expecting the formal announcement of earnings from First Bank. About 6 banks have already reported their full-year earnings. A couple of them are giving out cash dividends, while one of them is giving out a bonus share, 1 for 20. That's First City Monument Bank. So we're having a mix now of both forecasts and full-year earnings. When the markets resume tomorrow, hopefully we would have some more earnings from the full year of 2011. Now, another brief recap of what the markets was like last week. That's for the local stock market. We saw the bulls ending the week after just 4 days of trading, up 1.40%. The market had a bearish run previously, as many investors took profit off stocks that had rallied in the last couple of weeks owing to the earnings season. We've had some very robust, very impressive earnings from some of the companies listed. Also, the banks are inclusive. So we saw the stocks appreciating in value across the board, across some sectors of the market. But while that was happening, investors stepped in to take some profits. So we saw some of the stocks also coming down in share price. The local bourse closed the week at 20,941.93 points. That's for the week. Now, for the morning markets, we saw interbank lending rates closing the week at around 14.5% on average. Now, that was for the short-term lending. We did see some liquidity squeeze still persistent at the market. The Central Bank of Nigeria still also mopped up some liquidity through its open market operations. That's one of the monetary policy tools of the Central Bank of Nigeria to help moderate money supply in the economy. We saw also at the world market some volatility last week, from the Asian markets down to the European markets, and even on Wall Street. Wall Street had a very good run last week, but of course concerns about the renewed debt crisis in the Eurozone, particularly Spain. There's focus on Spain right now. There are concerns that Spain may be the new Greece in terms of funding. Spain has reportedly recorded quarterly drop in quarterly growth, that's GDP growth, in the last 3 or 4 quarters or so. It's still holding the highest unemployment rate in the Eurozone, 23.6%. Over 7 million Spaniards are out of work, especially those aged under the age of 25 years. The country has had to take very tight, very painful spending cuts, and of course the Prime Minister has announced some very severe austerity measures. Of course, the unions, both the public and private sector, have been kicking against these reforms, but according to the Spanish Prime Minister. The country needs that at this time. It needs to save some money. According to the new budget that came out, the Spanish government plans to save about 27 billion euros. And of course, it has promised the International Monetary Fund, the ECB and the European Union that it would embark on spending cuts to put it back on the path of recovery. But despite that, the country still had a very unsuccessful bond outing last week. Investors are demanding more now to hold on to Spanish bonds. So the cost of borrowing for the country has significantly gone up. We expect that to continue to impact on the Spanish bond market and perhaps by extension on the European bourse or sentiments at the European markets. Now, some stocks stood out yesterday at the Nigerian Stock Exchange. We've been tracking some stocks, especially those ones that put out very impressive earnings. Okomo Oil has been investors' favorite in the last 2 or 3 weeks or so after the company reported very robust 2011 earnings. We saw its turnover for the year 2011 coming up to 11.1 billion naira from around 6 billion naira in 2010. Now, pre-tax profit also jumped from around 1.62 billion naira to 3.92 billion naira. The company is also proposing a final cash dividend of 4 naira. That's in addition to the 1 naira interim dividend that the company announced last year. So it's been a huge favorite. The stock has risen about 38.4%, moving from around 24 naira 20 kobo to 33 naira 50 kobo per share. So many investors are positioning themselves, trying to take part or take advantage of the good fortunes of the company. Okomo Oil is listed under the agriculture sector of the Nigerian Stock Exchange. It's into the development and management of oil palm and rubber plantations, as well as processing of palm oil. Now, this is definitely one stock that we'll be keeping our eyes on here on Business Morning in the coming weeks, of course, for the duration of the earnings season on Wall Street. On that note, we'll come to the end of today's edition of Business Morning. Thank you so much for being a part of it. Channels News Track is at the top of the hour. I'm Esther Obudaga. Bye for now.